All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and another reversal day on our hands. So, third day in a row. This one a little bit more drastic than what we saw on Friday, and of course, Monday was a holiday, so Tuesday. But this one a little bit more deep. So, we'll talk about the S&P first, just the overall market. But yeah, so right around, we were kind of flirting with breaking out for the better part of about an hour and a half up until the Fed minutes, which were at 2 o'clock this morning. And the market seemed to like it, but sometimes we don't always go the first direction. Sometimes it's a little bit of a fake move. I think this one was a little bit different. Keep in mind, today was just the Fed minutes, so not a Fed meeting, but kind of had the reaction of a Fed meeting today. And, I guess some language came out that we learned was a little bit different than the statement that was given during the Fed meeting a couple weeks ago. It sounded actually, and I listened to a couple interviews on Bloomberg. I think Michelle Meyer was somebody who I listened to earlier, saying that, they're kind of the Fed is they want to see the inflation first, really, before they react. So it kind of seemed to me, and maybe I'm misinterpreting, but it kind of seemed a little bit dovish. However, if they're going to let things run with inflation and so forth, what we saw is just a huge move in interest rates. So let's first just look at we'll just do this backwards. Usually I like to look at the daily chart and then drill into the short terms, but I think there's some interesting levels on the 5-minute chart as well as on the hour, which I'm going to show you next. One of the things at the end of the day, we kind of hung on to this bottom of value. We kind of fell down into it, try to bounce a little bit, and this is sometimes how the value areas work. Once we break it, we break. And that was a good shorting opportunity. I did not do that trade, but certainly the value areas don't lie in terms of the opportunities that they present. Also, the one level that I was talking about yesterday, unfortunately, this has been breached. Now we can get back above this, and we notice all the consolidation. We held on to this this morning as well. So this 2707.75, which I've been talking about for the last couple days, fortunately that's been broken, and now we've got kind of a mess in here. If we can't retake this 2707.75, then we've got a lot of a lot of messy things down here, and I think you have to respect that. You do have this 200 period moving average that sometimes acts as good support. That also coincides with the top of value for last week, which is right around 20. And this is all in S&P futures that I'm quoting, but 26.85 is the level here. And then if not, unfortunately, 26.20, 26.47, and 26.20 are those next speed bumps down there. With 26.20 might be a nice level if we continue to have some more downside ahead. Really, so let me go to the daily chart as well, and then I'll give you, perhaps a little bit of observations that you may already know already, but I'll kind of rehash them a little bit. But the last 3 days, just as I mentioned, we've been, I was hoping, and again, hope is something that you could rely on. As long as you don't break any levels, right? And then it's kind of been in an indecision area the last couple days, and kind of saying, hey, what's going to happen? We've got overhead resistance, and we managed to hold the short-term moving averages, but now you see we have broken the short-term moving average. So hope is not the right term. While there's indecision, yeah, you can kind of root for things to go one way or another. If we would have closed on the highs, which we have not done since last Thursday. If we have closed on the highs, I would say we've gotten out of this pattern, but this pattern seems to get more dramatic. And if I go back to the 5-minute chart, you could see, now again, we had an event today, we had the minutes, but it's kind of been the same thing every day since Friday, where we've rallied and we've failed. This was around 12 o'clock, or I just call it midday Friday, we failed here. And then if I zoom in, you could see yesterday midday as well. We tried to get above value. This was again midday 12 o'clock and failed and went lower. And again, this was more drastic both on the upside and on the downside today. So really feels like a nasty reversal day. So very tough. And the observations are kind of a few best practices that I'm going to talk about, which can help you, I think. I'm going to get into, but before I do, the VIX was, I think, really difficult today. We really crashed down from where we were pre-market. Right on the open, we started to leg down and kind of gave a false signal. We got all the way, I think we touched a 16 today in the VIX, like just barely, like 1690 or 9. What was the low in the VIX? So really gave a false signal. Usually what happens with the VIX, and this is really backwards, but usually the VIX going into an event rallies into uncertainty, and once the event becomes known, it sells off. This acted the exact opposite. By the way, the VIX still finished down on the day, not the VXX, which is completely different, which is just straight short-term contracts. Only, I think now they have a little bit of April contracts, but I think the majority of the VXX is 90% March, whereas the VIX is different. It's got a couple months in it. So, yeah, we got down to 1697 and then ramped all the way back up to 20. So, really, really odd behavior going into event. Like I said, usually going into event, the VIX usually rallies, and then once the event happens and once the event is known, then the VIX usually sells off. But that's not what we had today. So that's where we are in the VIX, and I think until we get back to those lows of what we had last week, I would say tread cautiously. Just it is what it is. The other thing is, so here's some best practices. If you're a day trader, you must be loving this market right now because there's opportunities to kind of get in and out of things with the increased volatility. If you're more of a swing trader, which I am, there's a couple of things that you have to kind of take note of. You can kind of switch to what I've been doing and day trading a little bit more. And then for swing trading, really don't establish any. Be careful establishing positions during the day. Maybe wait till the very end of the day. Again, the end of the closing print. Towards the end of the day, you have so much more information than you do during the beginning of the day. If you thought this was the all clear for the day, as we rallied a bit and started to add positions down here, you're really going to get smoked. And same thing during the beginning of the week, as well as Friday. If you put on a couple positions in the morning, you've gotten absolutely smoked, and you're starting in the hole every day because of this end of day price action. So I think there's a couple things that we want to look for besides just in the technicals. Clearly, if you go back to the S&P. Clearly, if you go back to the S&P, we are now starting to move below. We're now back below the 50-day moving average. This is non-dividend adjusted, by the way. We're also below the 20 period. We're also below the 5. This is not a place we want to be adding positions. We want to be, my opinion, you want to be adding positions into strength as things go higher. Not go lower, especially when we don't have really good support here for a while. So it doesn't mean that we can't flip on a dime. We've certainly done that before, and as people kind of get washed out, sentiment gets lower, and usually once sentiment goes lower and there's a big flush out, then that's when we seem to turn around. But I think this has gotten some people caught off guard, especially myself included. Every time I've added a position and it hasn't been at the end of the day, it's been a rough going, and you're kind of caught with having to add positions at different places and so forth. But I think this is different. I've kind of been in the wait and see mode the last couple days. This will continue to just kind of, I think, sit on your hands here a little bit and wait for this volatility to kind of come out. And now we're kind of worse off than we were back here as we've dipped a little bit into this. Again, it doesn't mean that we're going all the way back down here. We'll have to honor those support levels. And I would say I can tell you what I'm going to do. I'm personally going to back off adding positions until we get a little bit of confirmation. And that could just be, again, one day of maybe us closing on the highs. That would be a change in direction, I think. So that's really what to watch out for. Again, if you're day trading, excellent opportunities throughout the day, no doubt about it. If you're swing trading, I think you have to wait till the end of the day until we stop closing basically on the lows. All right, so that's just the S&P. So clearly, what's been going on here is just the move down in interest rates. It seems like every time the move accelerates to the downside in bonds, meaning interest rates go higher, it's not boding well for equities. So I keep getting these or seeing these notes where people are comparing, and I talked about this yesterday, but people are comparing, interest rate increases to at other times, long-term interest rates. Oh, it's good for the economy when interest rates go from 3. Oh, we don't have to worry about this. I saw a note yesterday. It told we get to 5% in the 10-year, and history has shown that that's been the case, that it's positive when interest rates. Yeah, history. That's bullshit. Those times when interest rates climbed, we had a fraction of the debt that we are carrying now on the balance sheet. The Fed's balance sheet was a fraction. When you're comparing those historic times, take a look at what the Fed's balance sheet was in those times, as well as the national debt. They don't compare. So I don't think you can compare 5% interest rates in the 10-year to back then and make a simple conclusion. So be careful of that stuff when people are looking to basically supplement what they're thinking in overall equities by putting a half an hour of analysis and saying, this is, historically, it's been a positive when interest rates. We're dealing with a whole nother, the Fed's balance sheet is huge. So you can't just quickly have a jump in interest rates. And again, it's the pace of interest rates. The TLT, the TLT was down 1.3% today. So if it continues to be quick, it's going to hurt. There's no doubt about that. It's just too sharp of a move. So if it slows down and it's gradual, perhaps equities can absorb it. So I'll tell you what I did today. I traded a little bit of Boeing today. That was a day trade. And again, how I'm handling this is, I took a day trade in Boeing today. Go to the, go to the trades here. And I'll wait for that to come up here in Slack for a second. Of course, it's slow. All right, well, I'll wait for that to happen. Yeah, you could see everything's not working. But Boeing was a nice day trade, and I was looking for a move through the value area. I got it even further through to this VPOC, and that was it. And I took my day trade off, and I put a very small position swing trade on. Now maybe I've got something to work with going forward. A couple other trades that I did today, Citigroup. So taking targets, right? I mean, Citigroup looked like a great trade, and then all of a sudden it just completely, completely fell apart. But again, this is why you take targets. We put this trade on in the beginning of the day, ramped all the way to 78.40, took out this VPOC, went a little bit higher. Oh, here we go. So you could see some of my trades. So I took half off that Citigroup trade, and now I could add cheaper. I took this second target at $2. From $1.66. I get the questions all the time from members of the room. Hey, how do you do your targets? In option trades. Usually they're 15 to 20% apart. But if it's something where we have an event during the day, or it's the profits come quick, then you can tighten up those targets and maybe take 10 to 15% rather than 15 to 20%. Right? You always have to change based on your model. I also think that XLU is a short here. XLU has broken down. Look at what this thing did at the end of the day. I put this on Twitter as well. But if you look at this daily chart, this is a big move, a big break of the 200-day moving average. It's come back and it's retested the bottom of value and failed. I think this goes back to the lows. So I think that's a good trade to the downside. So that's it. That's kind of a longer-winded video for the day, but I think it requires a little bit extra explanation. There was definitely some call buying in a couple other financials in this morning, but it was pretty light overall for the day. A little bit of picking in Facebook, which we've seen the last couple days now. And then a little bit at the end of the day of aggressive put buying in the indices. Remember, I had talked about that. I was wondering why they're buying all these short-term puts aggressively in Qs and SPY. Well, now we know. So, they were expecting maybe something coming out of these Fed minutes that would jolt the market. So it looks like they were right. Again, most of those today a little bit different. They went a little bit further out in some of the put buying. A couple weeks, not a couple months. But remember what I said Friday and Tuesday about all those index puts. Most of them were expiring either this week or a couple weeks out. So there you have it. Thanks for watching today's video, and have a great evening.